I mean, I think it's a really important moment happening this year with, the Genius Act, really greenlighting stable coins, and then Project Crypto, which is Wall Street moving on to the blockchain. I think it's a lot like 1971 when the US dollar went off the gold standard. That created the innovation of Wall Street because they had to sort of essentially create this synthetic dollar. Wall Street moving on to the blockchain is a bigger moment, and I think that's why Ethereum is essentially having its 1971 moment equivalent.
Com Lee talks about crypto and Bitcoin. We'll cover market insights, predictions, and future trends. Stay tuned to learn more.
Well, I think that it's the Fed acknowledging that the risks now are tilted for the labor market to be softening, and they want to head that off, especially because they don't think that tight labor markets are going to necessarily create inflation. That's a very good sign, and I think it means we have a dovish Fed again, and that's kind of a green light for small caps. Yeah, because I think that one of the things we should watch for is what happens to mortgage rates, but mortgage spreads are right now 360 basis points higher than the 10-year. Historically, it's 1.6 percentage points, so you could see a huge drop in mortgage rates. That's going to help housing, helps the financial small caps, and I think already the ISM, which has been below 50 for almost 30 months now, could finally go back above 50, and that's a good sign for industrials.
Although we had a discussion right on the heels of the speech about a little steepening in the curve. Is there a sense that the vigilantes are at least present, if not being necessarily vocal?
Yeah, but we could also be steepening because growth expectations are improving as well. So this could be like what I'd call a bull steepening. I'm not really sure what the fixed income terms are, but I think it's actually a positive sign for growth.
Bitcoin is showing signs of a powerful move as technical patterns and market sentiment begin to align. After weeks of choppy trading, the cryptocurrency has formed a clear double bottom near $112,000, a setup that historically precedes strong rallies. In fact, similar patterns earlier this year sparked impressive surges. Back in April, Bitcoin jumped more than 50%, rising from $86,000 to over $125,000. A second double bottom in June triggered another sharp 25% rally, lifting the price back to $125,000. Now, traders are watching closely as the current structure develops within a tight $112,000 to $124,000 range, suggesting healthy consolidation before the next potential breakout. Adding to the bullish case is the confirmation of an inverse head and shoulders formation. The left shoulder emerged in December 2024, the head bottomed near $70,000 in April 2025, and the right shoulder took shape in June. With the neckline broken and retested around $113,000, analysts see this as a strong technical signal pointing toward higher levels ahead. Meanwhile, future sentiment has flipped positive for the first time in nearly a week. Data from CryptoQuant shows that bearish pressure has eased, with positioning in the derivatives market shifting back in Bitcoin's favor. This change mirrors similar sentiment rebounds earlier this month that coincided with price recoveries. If momentum holds, Bitcoin's path toward $127,000 and beyond may already be in motion.
The only real losers today are going to be some of the yielders and some staples. Would you be cautious on those?
That's right. I think that markets have been holding their breath. They've been getting defensive. That's why we've been bleeding for 5 days. And so now I think there's a relief and some capital gets put to work, and it's good for equities and risk assets.
So, all right, we need to make some news here, Tom. Everyone listens to you. We're at record highs now for the S&P and the Dow. How much more can these stocks rally?
I think there's a lot of upside. Especially because, once you get an ISM back above 50, it really does argue for a broadening of markets. And I think one of the leaders probably comes from the financial sector. So I think, towards the end of the year, 6,800, 7,000 is possible.
Led by tech still?
Yeah, so I think you still want to play
this week.
Yeah, you want to be long AI and the crypto trade because those have been the market leaders. So the Mag 7, Bitcoin, Ethereum. But the broadening is really the financials, industrials, and small caps.
So you like them all?
Yeah, it's kind of cyclicals, AI and crypto, but not the defensives.
Your crypto calls have been getting a lot of attention lately, especially on Ether.
Yeah.
Where we were talking earlier, we were debating whether it's the future of the financial system. A lot of people are thinking, people like you have said that.
Yeah.
But a lot of people just see it as wild speculation and froth.
I'd say anytime something goes up, people tend to call it froth. I think they called AI a frothy trade now, but we know it has a lot of legs and it's been taking place for a couple of years. Keep in mind, Ethereum is also the place where when agentic AI comes together, when you have robots and you want proof of human, you want to make sure those commands come from, a verified source. That's all taking place on a smart contract. A lot of it will be Ethereum.
Bitcoin's price action is once again being shaped by the moves of its largest players. After sliding to a local low of $111,000, the leading cryptocurrency rebounded to $117,421 before easing back to $115,601. This recovery came alongside signs that selling pressure is fading and that whales are quietly accumulating, fueling speculation that Bitcoin could be setting up for another push higher. Data from CryptoQuant shows that Bitcoin's spent volume dropped sharply, with the 7-day average sliding to 529,000 BTC per day. This steep decline signals that the heavy wave of sellers has dried up. Both long-term and short-term holders are realizing far fewer profits than earlier in the year, suggesting many participants are choosing to hold rather than sell into weakness. At the same time, whale behavior is tilting bullish. The exchange-whale ratio dropped to a 12-day low of 0.43, meaning fewer large holders are moving coins onto exchanges. Instead, whales are withdrawing, with more than 20,000 BTC pulled from exchanges in recent days. Such moves typically indicate accumulation rather than preparation to sell. With net flow turning negative at minus $128 million, aggressive accumulation is now outweighing deposits. If this trend holds, Bitcoin could reclaim $117,000 and make a run toward $119,600, provided sellers don't resurface and drag it back to $112,000 zone. Bitcoin and the crypto market are buzzing again, fueled by a mix of key events and growing optimism. After Powell's dovish comments, Bitcoin bounced and Ethereum surged to new all-time highs. This week, several major catalysts could drive even more momentum across digital assets. The biggest focus is on NVIDIA's earnings report due Wednesday. As the world's most valuable company and a key player in the AI boom, its performance will heavily influence both stock and crypto markets. Analysts expect a staggering $46 billion in revenue, with some estimates as high as $52 billion. Strong results could ignite another rally. Another major driver will be the Personal Consumption Expenditure, PCE report on Thursday. This data offers a broader view of inflation than the CPI and will help shape expectations for the Federal Reserve's next move. Core PCE is projected to rise 0.3% in July, with a year-over-year increase of 2.8%. Personal income and spending numbers will also be closely watched. On the crypto side, token unlocks could inject some volatility. Pi Network is continuing its massive daily releases, while Acceler, Ronin, Optimism, and Redstone will all add millions in supply. Whether the market can absorb these unlocks will be key for short-term price action. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.